So we're back here on the Duncan Duo Show, and I want to wrap up the last segment here talking about the last month's Tampa real estate statistics. So a couple of important things that I wanted to note. So in February of 18, we had 2,502 sales. That was slightly up from last year's 2,445. A good bit up from January, which is typical. You know, you're going to have more home sales in February than January. But it was better than the last several, Februaries. We're at 3.1 months of inventory. Average home is selling in about 60 days. The average sale price was where I was a little bit surprised to see this statistic. So usually you see a really nice bump in the average sale price from January to February, because in January the homes that are selling, maybe the sellers are a little bit less likely to get maximum dollar because the market isn't as hot. They're maybe desperate because their home didn't sell last year. Buyers have a little bit more of an advantage to get a better price. They don't have as many options to choose from, though. So for the first time in all the years that I have done the show and looked at the real estate statistics, for the first time from January of 18 to February of 18, we saw the average sale price in Tampa drop. Wow. Not a big drop. From 256,176 to 256,61. So it's not a big drop. But usually you see a couple percentage points up. So in reality, it's a couple percentage points down from what we've normally been seeing. And there are always ebbs and flows with real estate stats. So you can't ever make any determinations based on 1 month. There'll be some people who will say, oh, it's the start of a trend. Maybe prices are going to start softening. And there'll be other people who will say it's a monthly anomaly, or maybe there was some lower price sales. So nonetheless, for the first time in a long time, we didn't see a jump in the average sale price from January to February. So probably explainable, but I guess in coming months we'll see, do we continue to see a downward trend in that, or not as much of an upward trend as we've been experiencing? Does the appreciation start to slow down because of interest rates, or because prices have risen too much to make it unaffordable? We had 3.1 months of inventory. That's down from 3.8 last year, but there were, or 3.8 last month. There were months last year where we were at 2.4 and 2.5. So we do have a little bit more inventory. I suspect we're going to see a much higher number of sales in March, and we're going to see a much lower amount of inventory. But here's what I want to tell you about, because this is what was surprising to me. You can drill down and see inventory based on price points. And this, to me, is insane, because this reminds me of markets like San Francisco. For example, the amount of inventory for homes priced between 180 and 200 is 1.8 months. Oh, 1.8 months of inventory. Below 100, for example, is less than 2, 1.8, 1.9. Then you've also got really low inventory from 200 to 250. You're at 2.1 months of inventory. And then above that, it starts to hit into 3s and the 4s, the 5s, the 9s, and then when you get above $1 million, it's about 12 months of inventory. Up until you've got a seller's market even into $400,000, $500,000, $600,000 homes, and then above that, it starts to turn a little bit more towards the buyers. But when you're talking about the affordable price ranges, everything from 0 to, probably call it, 250, 260. It's still a drastic seller's market. Those homes are going bidding war, and there's just very little inventory.
That's your sweet spot for most of your first-time home buyers in that price range.
And there is so little inventory that it is. I mean, we have it on a regular basis. We put, we do some coming soon advertising. Another unique advantage that we have for home sellers is that, we'll pre-market a home to get some interest in it, start it up, before it hits the market, and we're getting calls and people wanting to make offers before signs are even up. The neighbor told somebody that they're selling their home with us, and the inventory is so light that you've got people going door to door to find stuff in neighborhoods, and so we're getting it, so common, people coming to us and saying, hey, I want to buy that house. Well, it's not really on the market. I'll give them whatever they're asking for, and it's like, well, the reality is whatever they're asking may not be what the market will bear. The market may bear more than that. So, I can present it to the seller, and we've certainly sold homes before they hit the market. So I can present it to the seller, but that doesn't mean the seller is going to agree. The seller could say, you know what, I'm going to go on the market. I want to see what the competition says. So, but nonetheless, really low inventory, which was really surprising to me in some of those 1.6, 1.8 months of inventory is just, nothing.
Andrew, can you explain to the listeners that don't know what months of inventory actually
Yeah,
means?
months of inventory is basically just the supply and demand curve. It's basically saying, here's how many homes we have on the market, and here's how many sales we had. So translate that into, if we continue to have that number of monthly sales, how many months does it take to buy up all the inventory if no new homes hit the market? So, if we had 10 homes on the market, five homes sell a month, you got 2 months of inventory. Simple math behind it. So definitely very low on months supply of housing. So we hope you've appreciated tuning into the show. We'll put up all of the videos at youtube.com/the Duncan Duo, as well as our social channels. Make sure to tune in next week, where we'll continue our conversation. We're joined next week by Aaron Davis with the Florida Agency Network and Strategic Title. After they'll have some exciting news about technology and mobile closings that they've launched recently. So we appreciate you tuning in, and have a great rest of your Sunday.